one thing that I realized, family, when I was on the cruise, I was taking pictures, I look weak as fuck. I look frail. Although I am still long-term bullish, I believe we could experience taking this trade with stops above previous day's high, which will be down here to go ahead and grab all this built up liquidity. One thing that we have to understand as traders is that sitting on the sidelines and staying cash is a position and is a decision in itself that could be very profitable for you in your trading career. Welcome back to another video, guys. It's your boy Abel checking in. It is the start of a new trading week and I'm excited because I feel like we're about to make a bag this week, y'all. Last week on the cruise, I did take some trades. Wasn't too active though, because obviously it's hard to get internet on the boat. Even if you pay for the premium internet, it's still kind of a little shaky. But we're locked back in here, ready to go ahead and see what this week presents us and what opportunities we ultimately have. But before we even go ahead and get into the actual markups, because I do see a couple setups loading up, I really focus on trading gold, trading the NASDAQ, the S&P, Dow Jones. And at times, you know, I primarily trade futures, but there are times obviously where I do still like to trade my yen pairs like the GJs, the UJs. So I also gonna keep my eyes on those as well. I still have a personal Forex account just for literally those two yen pairs. It's the only time I'm trading Forex now is literally just to trade mainly GJ more than anything, just because that's been my baby. That's always been one of my favorite pairs. But to be honest, 95, 98, 99% of the trades are definitely on the futures side of things, trading gold or mainly the NASDAQ, the S&P, or US 30, the Dow Jones, or YM, however you want to call it. But before we get into that, guys, go ahead and take a quick look at the calendar, man. See what we got here. See if there's any major news on the horizon that we have to be aware of. And then we can go ahead and take a look at the markets I'm looking at for today, mainly gold. All right, y'all. So today is September 23rd. It is currently 8:11 in the morning, about an hour and 20 minutes out from stock market open. But looking at the news for the week, guys, we do have some data coming out in about an hour and a half that is going to definitely bring some volatility for today that we have to be aware of with global manufacturing PMI data. PMI data, guys, is, or not just manufacturing, but also services PMI. PMI data is definitely very interesting, right? It gives us an insight as to how certain sectors are doing. Like looking at this first one, global manufacturing, is going to tell us how the manufacturing industry is doing, right? And seeing if it's actually expanding or if it's seeing contractions. You know, this can give us an insight to see if those industries are experiencing a boom that could possibly affect inflation, or if those industries are just seeing a massive correction as well, which can ultimately benefit inflation. Now, inflation obviously is not as much of a concern as it used to be, you know, just a couple years ago. As you guys can see with what the Fed did last week, they ended up cutting rates by 50 basis points, which also shows that inflation truly isn't as much of a concern. The concern now for the Fed and what a lot of investors and day traders have to be aware of is definitely going to be more focused towards the labor market now, just because the labor market has been a lot more volatile. It hasn't been as sticky as it used to be, you know, with the unemployment rate, you know, increasing consistently over the past few months. That's going to be the main focus point for the Fed as a whole. But with what we see right here, guys, again, these are definitely going to bring out some volatility here, these reports. So we'll go ahead and analyze those, see what the market does due to them. Again, that is at around 9:45 a.m. Eastern. So we'll look at that. And then going into tomorrow, guys, we have some Australian dollar news with the Australian RBA interest rate decision. If you are trading any Aussie pairs, be mindful of that. Again, I don't trade Aussie pairs, so I'm not too concerned. Wednesday, nothing crazy. Thursday, we have, let's see, Swiss franc interest rate decision. I don't care about that. I don't trade that pair. But we do have GDP for the U.S. Okay, that's a big boy event. We're going to see how our economy has been doing. Has it been growing? Has it been contracting? And we'll see how that comes out and how we could take advantage of it. We also do have at the same time coming out durable good orders, another report that can definitely bring some volatility. And we also have the jobless claims reports, right? Continuous and initial also coming out. And then later on in that day, we also have the big homie himself, Mr. Jerome Powell, going to be speaking, right? So Thursday is going to be super volatile just because there's a lot of different news events coming out all within about an hour or so. So that one's going to be interesting. And then Friday, to finish out the week, we do have PCE, core PCE and headline PCE numbers coming out. PCE, guys, is another measure of inflation, and seeing how that come out can then definitely bring out some volatility for sure. So that is going to be our news for this week, family. Overall, it'll be a very volatile week, man, especially with a few of these reports. Now, again, just like I mentioned, right, inflation isn't as much of a concern, but it's not like traders and investors and the Fed isn't going to be analyzing it, right? Especially now that the Fed cut interest rates by 50 basis points. That's a very big jump. You know, if you actually look back at history, guys, the last time that the Fed actually cut by 50 basis points after a period of a rate hike cycle, we have went into a recession. Most recently, I think it was in 2020, all because of COVID. The one before that was the 2007, 2008, right before the housing market crash. So it's definitely going to be something that they still keep their eye on, but again, it's not as much of a concern as it once was. Now, let's go ahead and get into the actual technical side of things, guys, and see what opportunities I'm going to be looking for going into today. And I'm very interested with gold to start off today. The reason being is because gold itself has been pretty bullish, as you guys can see. This market has been constantly just going to the upside on the back end of interest rates getting cut. It's been flying or so. But I think there could be time for a decent correction here in this market, right? So although I am still long-term bullish, I believe we could experience a little bit of a pullback before we actually continue back to the upside. And what I'm really going to be keeping my eye on is how we play out today. So we're here on the 1 hour time frame. And if we look at what happened here since, the open yesterday, we had the market pretty much break previous day's high and then immediately caused a massive shift back to the downside that also ended up breaking structure. Now this is big, right? Because a lot of liquidity, guys, when we're talking about liquidity in the markets, a lot of the liquidity that we're looking for are above previous day highs or previous day lows. Previous day lows is all the way down here, right? But we did take out previous day high and seen a nice strong shift in structure. That is major. We came back up, we started playing around the VWAP, and now what I'm gonna be looking for today, if we're able to actually get a strong close back below the VWAP, I'm probably going to be taking this trade with stops above previous day's high. Yeah, I'll probably be taking this if we get a close below the VWAP here on the 1 hour or even maybe the 15-minute, and then just put stops above previous day's high and then try to target all this liquidity down here around 26.27. Again, this is based on futures pricing. Futures and forex pricing is a little different. The reason why I like this area is just because we have these equal lows and all this imbalance that is still left behind, right? So we take out highs, took out liquidity, taking out previous day highs, ended up seeing a nice shift in structure. And now if we can get this close here, this could be our next lower high to then go ahead and create our next lower low, which will be down here to go ahead and grab all this built up liquidity. Okay, so as of right now, we did see a nice little bounce back up off of the VWAP. So no trade, no entry as of yet. I almost actually pulled the trigger though, because we did get a little 5-minute break, but I'm not too concerned about those 5-minute closures below the VWAP itself. But we did end up pushing a little bit higher. Now I want to see how we actually play around this supply zone that we have up here. Are we actually going to start to see, sellers enter the market up here, or is price just going to continue to drive right on it and then just continue in the overall trend? Because that is a possibility, right? The market could just continue bullish here to the upside because we have been extremely bullish. I personally don't think it's going to happen, but hey, listen, the market doesn't move on how I think. I think we need to go capture this liquidity down here first before we actually see continuations, but you never know. Right, the market gonna do what it wants to do. All right, so we're back here, family, and zero trade so far. It is currently 950. The market itself definitely pushed a lot higher than I was anticipating. We ended up breaking the supply zone that I was looking for the reaction from. We just didn't get that reaction. This thing ended up just running right through it, and then we were actually holding previous day's high pretty well, just bouncing off of the support here. A lot of whiplashing though, especially if you look at gold. Like gold is literally just continuously bouncing off previous day's high. So because of that, I'm kind of leaning towards maybe continuations here to the upside now for gold, just based on how we're playing, based on the fact that we took out the supply zone. We ended up breaking back above previous day's high. We're currently creating these higher highs and these higher highs and these higher lows now on the 5-minute time frame. So I would probably assume that we're probably going to continue to the upside. Now, if price does come all the way back down and breaks back below the VWAP and we shift structure again, now would probably be changing my bias at that point. But for now, I'm just going to be watching this and seeing how we continue to react above, previous day's high. It looks like probably not going to get a trade until after 10 o'clock. Let the 10 o'clock volume come in, and then from there see what direction this decides to go towards. In terms of the NASDAQ is also just pretty much going back and forth here. We really haven't seen too much movement whatsoever here, but we are seeing some bullishness here, and I would assume I would like for us to actually look for more continuations to the upside here for the NASDAQ. Same thing for the S&P. I would like more upside, and US 30 as well. I would like to see if there's opportunity for more upside. That's just my initial bias, but we got to wait to see what the price action does and what price action tells us. So I'm going to be patient with these ones. Not going to rush into these neither. Yeah, these shitty markets, especially for indices, are extremely annoying right now. Super choppy to start the day. I mean, it is a Monday, shouldn't be too surprised about it, but super choppy market conditions that are just not allowing me to get an opportunity. Gold is giving the upside that I thought it could happen, but again, I'm hesitating a little bit just because of how choppy these markets are, how shitty they look. So it might be a no trade day for me as of now, depending on if we get something clear, because we're not getting nothing, man. Like, indices ain't do nothing. Like, look at this. This is the NASDAQ. We ain't do nothing since we opened. We just been stuck here, trapped here. US 30, I mean, this started whiplashing a little bit, but look, it spiked up, came all the way down, now it's spiking back in the middle of this range. Super choppy. The S&P also not really doing much. Super choppy market conditions. They might start moving here, but boy, these conditions are pretty bad right now. So as of now, I'm chilling on the sidelines, family. I'll let you guys know if I take some, though. Yeah, that's gonna be it for me today. Nothing at all. No trades, zero trade day. It is a Monday, so I'm not too stressed about it. Zero trades for me in the market. It's all good. It happens. You know what I'm saying? No harm, no foul at the end of the day. Now I'm about to go ahead and get a workout in. Because one thing that I realized, family, when I was on the cruise, I was taking pictures. I look weak as fuck. I look frail. So now my pictures motivated me to get my ass in the gym, start working out. So I'm about to go ahead and hit the gym and get busy. Alright, so we're about to go ahead and get busy real quick. I really need to be consistent, guys, with going to the gym, because that's one thing I have not been consistent in whatsoever, and I want to be, but I haven't had the dedication to actually go ahead and be consistent with it. And that's a problem. You want to be consistent in everything that you do, because how you do one thing is how you're supposed to do everything. So if I want to be consistent as a trader, if I want to be consistent as a business owner and entrepreneur, then I also need to be consistent when it comes to my health and actually going and getting my butt in the gym. Now, the crazy thing is, the one thing that is motivating me to actually get in the gym is my own self. You really humble yourself when you actually look at yourself in the mirror, or you look at pictures that you've taken while you're on vacation, and you realize how frail you kind of look. And as a man, that bothers me. That hurt my ego, hurt my pride. So I'm gonna be in the gym consistently 3 to 4 times a week, working on chest, working on shoulders, working on my buys, my tries, working on legs, and just trying to get better overall as a whole. And if I don't upload a video with me in the gym, I need y'all to hold me accountable, family. I need y'all to hold me accountable, because I deserve all the smoke that y'all gonna have for me, because I'm not doing what I know I'm supposed to be doing. Now let's go ahead and get this workout in. So let's talk about it, family. Today I was in the markets for about an hour, 2 hours. Got on at around like 8:30, started analyzing. Started recording with you guys at around 9:30, and stayed on until about 10:30. And I took 0 trades, 0 positions. And that's fine. That's cool. That's normal. And one thing that I had to learn early on is that there's 3 decisions that you can make. You can either enter a buy, you can enter a sell, or you can just sit your ass on the sideline and not take no trade whatsoever. And in fact, one thing that we have to understand as traders is that sitting on the sidelines and staying cash is a position and is a decision in itself that could be very profitable for you in your trading career. Because the reality is, what most newer traders typically do, and not even newer traders, there's still a lot of experienced, unprofitable traders that come into the market every single day, and they have the urge to press the button every single day. Whether they believe their setup is there or not, they just have that urge to want to push it. And your job as a trader is very simple. It's to follow your plan, remain disciplined, and be patient, and preserve your capital. If you're able to do those things, then you're going to realize that not every day is a trading day. Today was literally a non-trading day for me, because I had my setup that I initially wanted to look for. It got invalidated by a break of the supply zone, a sweep of the highs. And yes, I initially was going to look for the opposite direction, because that is a part of my plan, but nothing was forming, nothing was showing. I didn't get exactly what my rules say I need to look for, I need to get in order to actually execute. So I made the best decision for today, and that is to sit on the sidelines. Why is it so hard? And I want you guys to answer this in the chat, in the comments down below. Why is it so hard for traders to just say, you know what, I'm not gonna push the button today? Like, really think about that, because I know a lot of you guys that are probably watching this also struggle with that. In fact, I want you guys to do this real quick. I want you guys to look at your trade history from last week and look at how many positions you took last week and just drop how many positions you took in the comments down below. Because the reality is, guys, I probably take maybe like 4 or 5, maybe 6, 7, less than 10 positions in a week I'm entering and I'm executing. Less than 10 in a week. I'm pretty sure some of you guys that are now doing this exercise, right, that is going back and looking at your history, some of you guys probably took 10 positions in a day. And then you're wondering, damn, why do I keep on blowing these accounts? Why do I keep on blowing these prop firms? Why am I seeing my capital just deplete every single minute, every single day? It's because you're over trading because of that urge to enter the market, because of that urge to expose your capital to the risk that this market comes with. No, your job as a trader, guys, is to limit how much exposure you have in these markets. Less is more. Now, some might argue, well, Abel, bro, I'm a scalper. I like going for 5, 10 pips, 5, 10 points. That's cool. If it's a part of your plan to take every single opportunity that you feel like is fit and that accounts for 10 plus trades in a day, then by all means, don't listen to me. Do your thing. But if you're not profitable and you're not seeing consistency with that style of trading, then you have to adjust. The crazy thing is, guys, right, and this is something that I realized early on, and there's stuff that I also just know now today. The first and the second opportunities that I take in the market are usually the best ones that I have. That first trade that I take in the day is usually going to be the best one because I'm clear as hell. My mind isn't cluttered with the decision making that I already made for the day, and I can focus on the plan that I have set for myself. It's when I decide to take that second, that third, that fourth, that fifth trade in the day that causes my account to now start to really deplete heavily. Those additional trades after my first one are the ones that typically lead to a blown account. That's why for me, I try to capitalize off of my first and second trade because I know that's when I'm the least emotional in these markets and I'm literally moving based off logic. Because once you take that first and second trade, no matter what the outcome is, that can either sway you to continue to trade and make bad decisions now because you're trading off of your emotions, or that can cause you to say, you know what, I'm good. I don't want to have nothing more at risk. Let me just take a step back and get out of these markets for today. And I can come back tomorrow with a clearer head, clearer mind, and the ability to make more logical decisions. It's your job as a trader, guys, to really dictate this and decide this and be disciplined with it. And if you're not able to do so, then you can't be mad at yourself or surprised with the results that you actually end up getting. So again, remember this, guys, less is more. The less trades you take in a day, the higher the probability that you're going to be able to trade the next day. So without further ado, I'm gonna go ahead and finish out this workout. Again, I'm trying to be consistent with this. I've been busting out my chest now. My chest is definitely gonna hurt tomorrow. I already know. That's the point of it, right? No pain, no gain, baby. Let's knock this out. And that's a wrap. That's a wrap for today. I feel like I could have done a little bit longer, but my arms are shot. That's what happens when you don't work out and you're inconsistent and you come back and have to start all over. Nah, your consistency is gonna dictate everything. If you're consistent with something, it gets easier. At first it's tough, but it gets easier. But if you start and then stop and start again and then stop, you're gonna go from it being easy or hard to easy, then hard to easy, and you're never gonna be able to break that cycle. So I gotta come back tomorrow and continue this consistency and continue to get better. Let's get it.